Hello, this is, in hindsight, a technical analysis view of FTX. There's a lot of chaos that FTX coin has caused, and FTX themselves. The FTX coin is FTT, and I would like to take this opportunity to show some signs of weakness before the fall. This is for a learning perspective and not a forecasting perspective, obviously, and I'm not talking about what FTT will do in the future. I'll be using the black line here is the EMA 20. That's a very famous and popular indicator, exponential moving average, and I'm looking at the weekly candles. Now we'll start with um, this rally over here. Okay, this is a big rally, about, I don't know, maybe 10, 15 bars. Uh, just very bullish. And this is can be seen as a spike in channel too. You see that sometimes. Very tight uh, upward channel, and then still, sorry, a spike, and then a channel that has a lesser angle, but is still going up with a few pullbacks. And then we're getting the first big pullback, which is this bar, and it's a 50% drop on the week of 17th of May, 2021. Now, even though that this is a severe drop, usually after such a big rally, the first drop is not the last. And then so we're looking for another either lower double top or double top or higher double top. Usually that's the case. Or we're looking for a certain retracement. But usually, uh, this is typically, it doesn't just go boom V, okay? It has another, at least, sideways to down movement or some sort of a double top if it's about to later go down. And this is the top. And of course, there are cases where it just keeps on going up, okay? But when you see this after such a long rally, usually there's a little bit more drive coming from the bulls. Now, uh, what we see here, we crossed up back the EMA, this bar closed above, and then we see this big, huge volume. It's about 5 times as big as any of the big volumes, buy volumes that were, or volumes at all. And it's either going to be another step up in the coin, or it's a trap. Okay, because we had this 50% drop, this is a bit of a tell, because why would the price drop 50% if it's not trapping here? It would trace down a bit more and then do a more gradual or bigger push, but it wouldn't drop 50% so much. So when we see this big drop going below the 20 EMA and then another leg up, okay, with a huge volume, this is usually a trap. I mean, you need at least to look at that as the option. Now, it doesn't mean that you're shorting exactly here, but you were going to look at the price action coming through, following and keeping this in mind. Okay, we're just collecting tells. Okay, this is still in October 21st. Now, what do we have after this big spike up? You would expect, if if the market is right, if all these buyers are right, that would later go up. We here quickly test the 20 EMA, and then we have basically one, two, three, four, five candles and more closing below the 20 EMA. After such a big volume, this is another tell. We have also here, we'll be looking at, let's get a close up here. Okay. And then we have a few attempts to go above the 20 EMA, but look at all these wicks. Okay, all these wicks. These are traps. These are trapping the bulls. People that saw the bar here went up, and then basically trapped them and closed the weekly candle below. Okay, so we have a lot of these weeks, and here we have finally something that looks good, but usually, and I could also get trapped here, to be honest. Uh, and in hindsight, because we are trying to also uh, capture some learning, you want to see that either you get a second candle, weekly candle continuation. I mean, you can take bets here, but the reward versus risk is higher, and then your probability is lower because you have less information. And here we saw that within two candles, we're dropping back to the 20 EMA and not even making another attempt. So looking at, sometimes you need to look at 5 bars. So after these 2 bars, the next three, and here I'm mentioning 6 bars, you see a disappointment. And the fact that we have here a formation of, this is a left shoulder, head with the trap. And now right, especially, it's not going up over the top of the left shoulder, then that is a big sign of trouble. And then we have just a lot of candles going below the 20 EMA. And note also that the 20 EMA is starting to slant downwards. Here it was slanting upwards, retracement upwards, and from here it's slanting pretty much downwards. Uh, and yeah, this is a disappointment. Then later we have this low, which becomes a support. That support is broken, resistance, again, not going over the 20 EMA, going a little bit over that line to trap, again, to trap uh, um, bulls, and not closing above the 20 EMA. You would like to see here, if you're going long, a close of the weekly candle above the 20 EMA, and again, a disappointment with all the bars closing below the 20 EMA. And now we're getting to the final part, which was also tradable, because we're seeing all these signs, and we're seeing this head and shoulder, this is like a right complex shoulder. We have a neckline, which is basically, we can call it even a rail. We've got this low. Even if you want to conclude this low, you can. Okay, so once we have, and I will be going to daily candles. Okay, once we have a close, we can of course go even hourly candles. Okay, or 4 hourly. Let's go to 4 hourly, which is the minimum sort of time frame to see something that is not noise. So this here on the 7th of November 2022, we had a 4 hour candle going below uh, um, all those horizontal lines and all those prices that we mentioned. Okay, here that could have been the final sign of the short. And even if you catch it, say here in the middle, more or less, or at 20, okay, let's to make it at 20, more or less, after seeing the cross of 21.83. So you had quite a bit of um, room to see that. You could be going for a huge risk versus reward, and whoops, and going for something like, let's see, you could have been going easily 50%. Okay, now, yeah, easier said than done, and a bit of in hindsight, of course. But the point is that we had a lot of technical signs as mentioned. So you start with the weekly, check out that trap with the over exaggerated volume, the 20 EMA not closing above, the fake outs without continuation, and the neckline of the head and shoulder or other lines that are references to fake outs. Okay. And then you take the reward versus risk. Even if you're not right, your risk would be above the 20 EMA or above the open or high of the previous week candle, and the reward is huge. So, hope you learned a few things about how to look for signs on the weekly time frame. Do visit Forex Live Technical Analysis for additional perspectives, and have a good week. Thank you.